Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before beginning, I'd like to make it clear I'm not a financial advisor. Everything I discuss here is for informational, educational, and entertainment purposes. The technical indicators I use are not accurate 100% of the time because the fundamentals of a company and macroeconomic factors can drive share price changes differently than we'd expect based on technical indicators. My goal is to bring certain companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company or consult with a financial advisor. Today, we're taking a look at the Home Depot, ticker symbol HD. Home Depot just reported earnings, and it was a significant miss. And their shares are down over 2% so far. In case you're not familiar with Home Depot, this is a large building construction retailer in the United States and around the world. Market cap is just under $300 billion. Taking a look at the annual chart here, you'll see that Home Depot share price was essentially moving sideways within a narrow channel since late February, but they just reported earnings. You'll notice it gapped down pretty significantly here from about 290 opening 2 days ago to closing of 282 yesterday. And if we scroll down to the RSI, you'll see there's a sharp drop in the RSI. The stochastics have not yet taken into account the sharp drop, so they are still just above the oversold zone. However, the volume chart does in fact show a giant spike in selling pressure. And the MACD, if you look closely, you'll see right here, the end, we had what looked to be a close back to zero, and now we get a downturn with falling further below zero. So all these things and the recent earnings release and miss leads me to think this is not the bottom for Home Depot right now, that it is going to fall further. I just really think this should be one that's on your watch list. Pay close attention. I'd personally like to see this get down to around the, 225 range maybe. Now, of course, you'll see if you're looking at the chart, you'll see this big gap that took place in mid to late February. And if that gap fills, that would put us back well over 300, which would be outstanding. Now, I will expand the chart here, the timeline, back to the 5-year chart, just so you can see. This is where it was prior to COVID. We were down here in the 240, 245 range. And at its peak, or way up here over 400, 415. That valuation is just unbelievable. So here we're somewhere in the middle. I would certainly like to see it closer to its pre-COVID levels before I put significant funds into Home Depot. Now, as I like to do, we will go over here and take a look at the fundamentals on E-Trade. Again, this is just a very broad, general overview. This is not a deep dive by any stretch. But just from glancing at these fundamentals briefly, you can see there's a very small short interest. The debt to equity ratio is surprisingly average. Given the scale of Home Depot, I expected it to have higher debt since they have to finance more properties and space, but it turns out it has average debt compared to its peers in the industry. If we look at the PE ratio, it is higher than 67% of other companies in the industry. And this is what you'd expect for a company of Home Depot's quality. We switch over here to the margins. Gross margin beats out 75% of other companies in home improvement products and services retailers. And again, because of the scale of Home Depot, that's what I would expect. However, what I was surprised by is the operating margin, which beats out 100% of its peers. Home Depot is best in class. And kind of also surprising is for being the best in the industry, the operating margin is only 15%. Now, this is a good margin, but I'm a little shocked that the operating margins are that low in this particular industry. And if we switch over to return on equity, return on invested capital, you'll see some data is blank here, but I can tell from looking at other companies in the industry, which I just did, that this is a very high return on invested capital. This is an outstanding number. Growth rate is average, which again, that's great for a company on the scale of Home Depot. The dividend, 2.9%, well above market average, which is good. And payout ratio is very safe at 45%. But again, surprising is the dividend yield. The dividend yield is greater than 100% of other companies in the industry. So I admit I was a little surprised. Home Depot is, again, best in class on their dividend. And if we look over here at the turnovers, again, it doesn't give a comparison, but I can tell you from looking at other companies in the industry, just when I was doing a little comparison before I started the video, that these are high numbers. It has excellent turnover, which you'd expect with a higher than average gross margin sales. So again, I think this sharp drop in Home Depot could be the beginning of a fall that presents an excellent buying opportunity. I'm going to personally wait to purchase shares, but I think that this should be on your radar and should be on your watch list, and you should pay attention to where Home Depot goes from here. So please let me know what you think in the comments section below. And if you got something out of this, I'd appreciate it if you'd hit the like button and subscribe to help out the channel. If you like these overviews of companies that might be good swing trades, please leave me a comment for the YouTube algorithm. YouTube loves those things. Or even if you prefer to tell me that I am stupid and I got something wrong, leave that comment, because all comments help. And of course, as always, if you'd like me to take a look at a particular company using these indicators, mention that in the comment section and I'll get to it as soon as I can. And that's all for today. Thanks for watching. Good luck with all your investments.